everyone. I'm Gary Brode from Deep Knowledge Investing. We work with hedge funds, family offices, registered investment advisors, and individuals like you to help you get better returns in the stock market. Last week, Howard Friedland filled in as our guest host. He did a fantastic job. I'm also pleased to welcome back our regular host, Robb Fahrion. He's the CEO and founder of Flying V, our digital marketing partner. Robb, where in the world were you last week?
Well, Halloween's coming up. I'm actually Howard. I just have a wig on this week. So, yeah, if anyone is fooled, I don't know what that's all it is. But no, Howard did an admirable job. Thank you, Howard, for filling in. Really appreciate that. I was actually on the East Coast. So, yeah, I have a client in Wilmington, Delaware, and then ended up spending the weekend in Manhattan in the city celebrating our first wedding anniversary with my wife. So we had
Yes, I'm so glad you specified with your wife. You needed to get that R clarified.
That's right. That's right. That is a good point. So, yeah, it was wonderful. Weather was amazing. Pretty crazy weekend. Yeah, better weather than we had here in Southern California. Everyone was showing us from home. So, yeah, we had a blast. I love New York. It's nice being really close to everything. Makes it's very dynamic. And then feeling like I'm a little bit ahead and on top of things versus anytime I wake up on the West Coast, I'm already buried.
Yeah, but right. By the time you guys wake up, like the market's open, the world is moving, things are
Yeah.
happening.
Yeah, yeah, there's something to be. I'm understanding more and more why everyone thinks Californians are just lazy. Or we actually have a client, he's in Mechanicsburg, and he thinks I surf every morning. So I tell him now I tell him you're right. I gotta go catch the waves while everybody else is up and at 'em and get rolling at a 9, 10 a.m. clip. So
Well, the last time I went surfing was in Madeiras, Nicaragua. Fantastic
wow.
place for it.
Okay.
Surprisingly, I was not able to when I was in the Philippines last year, but I'm hoping to find some good places to go surfing this summer. Sorry, this winter. Well, summer in South America, winter here. Anyway,
Very good. Gary, I'm excited to be back, though. Glad he was just keeping the seat warm. I'll have to be careful, though. But this week's edition, the rising price of commodities edition of the five things. Bank of America CEO talks about Bitcoin, circling back to Bank of Japan. It's been a little bit since we spoke about the Bank of Japan. We've got Costco making an appearance. We're talking about oil prices as well. And then again, we've got our fifth thing, a little bit of investor knowledge, talking a little bit of investment thesis, ideas, strategy, etc. Gary, ready to rock and roll?
let's go.
All righty. Thing number one, Gary, Bank of America CEO, as I mentioned, talked about Bitcoin. He said if you own Bitcoin, you could wake up to a zero balance one day. And then something interesting happened with Bank of America customers and their experience at the bank. Thing number one, Gary, Bank of America outages, Bitcoin's ironic moment. I absolutely love that headline. Know exactly where we're going.
Yeah, oh yeah. And you know, the behavior of our big bank CEOs regarding Bitcoin has been absolutely hilarious. Jamie Dimon, the head of JP Morgan, at one point told people that anybody caught trading or owning Bitcoin would be fired, not because it was wrong, but because they were too stupid. Yeah, now they're trading in it. BlackRock made, similar kinds of comments that it was a fraud until they figured out, oh, wait, we could make money from an ETF.
Yes.
But the absolute best in this situation was Moynihan um, from Bank of America. And you, Rob, you got the quotation right. His quotation is Bitcoin is highly speculative. You could wake up one day and your account would be worth zero. Well, last Wednesday was a bad day for Bank of America customers. Their systems went down by I mean the bank systems, not the customer systems. And so people who tried to access their banking apps or their online banking, guess what they saw, Rob? They saw the balance in their account was zero. That would be the balance in their Bank of America account, not the balance on their Bitcoin. So, boy, that's kind of interesting. Apparently, Bitcoin is more stable than Bank of America. apparently the probability that your Bitcoin account is worth zero is less than that if you're running Bank of America. So, my advice, one of the things that you learn in the hedge fund business is how important it is to avoid hubris. We have all had the situation where we've seen somebody do something that we consider unwise and it doesn't work out and they lose a lot of money in it. And what you'll find is that most of us tend to be very polite and very quiet in those moments when you know somebody's hurting, when you know somebody's taking a big loss. You don't call them and say, "Hey, I heard things aren't going well. How were your returns? What's going on?" You just don't ask the question. You leave it alone. You don't make fun of somebody for getting a stock pick wrong, because guess what happens, Rob? Guess who's the next person that the universe will punish for that
Happens so
behavior?
quickly.
Yeah, it's going to be you. And so, it's it's really important in everything you do, but particularly in finance, to avoid hubris, because when you think you're bulletproof, when you think you can't do anything wrong, when you think everybody else is the idiot all the time, the universe will find a way to arrange itself to disabuse you of that particular notion. And so, the CEOs of these big banks and big investment firms, they all took their shots at Bitcoin and they've all ended up eating their words. Um, Bank of America should not be saying Bitcoin is a potential zero when their customer accounts are showing zero. Um, More than anything, though, here's Rob, this is the key point of all this. I'm just going to skip to the end before you can even ask the question. Um, this is why deep knowledge investing constantly says you should have some assets outside of the financial system, right? And I don't recommend, packing your mattress with cash. That was the old way that, people used to keep assets outside of the system. And the reason I don't advise that is because the purchasing power of those dollars will decline, and they're declining rapidly, but it's going to decline over time. But owning physical gold, owning Bitcoin, and having self custody, right? That old expression is correct. Not your keys, not your coins. If you own Bitcoin, do not keep it on the exchanges, right? Actually do the work and take custody of it. If you don't know how to do it, reach out. We will show you how. If you are willing to commit to just 1 hour, we have a guide for you that will walk you through it step by step, how to self custody your Bitcoin. It'll take an hour. I get it. You're going to be nervous at first because you're not sure, but the truth is, you test it first with like $10. That's what I did the first time I went to self custody Bitcoin, Rob. I tested it with $10. When I saw the $10 go through, okay, great. Now I'm going to move real money. And that's exactly what I did. And so for people who are confused, we can show you how to do it. Just reach out. We'll connect you with the guide that we have. But the key thing here is have some assets outside the system. The system is not stable. And listen, did and will Bank of America customers be made whole? Of course they will. I'm not suggesting that the whole system is, a complete disaster, but when these systems can be hacked or they can go down, you want to have something outside the system. And, my final advice for all of these, big firm CEOs is, enough with the hubris. Stop talking about how everyone else's decisions are going to lead to disaster. Get your own house in order.
Gary, is having the assets outside of the system more a point for you that, hey, you can now use these assets to trade whatever it may be, right? Versus if you are tied to Bank of America, something happens with their system and now you're tied up, locked out until they get their house in order. Because obviously people will say, oh, well, my bank account, Bank of America has got insurance and this and that, and I'll be made whole there, versus something happens to my keys on crypto side, right? Or I lose my gold bars, whatever it may be. So yeah, curious on your thoughts there.
Yeah. So Rob, what you're asking is the right question. And the answer is nothing is perfect, right? You could be Scrooge McDuck and have a vault full of gold, but guess what? It can be stolen.
Hmm.
and if you need to leave the country, leaving the country with, huge amounts of gold, you're going to get stopped at the airport if there's something happening, if there's a reason you're leaving. Um, Bitcoin, it's the same kind of thing. Like, have people been hacked? Sure, they have. If you use a device, could you lose that device? Could you lose your keywords? Of course, there's always something that can go wrong. And you're correct. I'm in no way suggesting that Bank of America has failed, is going to fail. People, have been made whole or will be made whole. But there are two key issues here. One is you're showing a zero balance while the bank sorts it out. And so just think about this one hypothetical example. But imagine you're about to go on a trip and you can't get access to cash. Imagine that your mortgage is due or that your taxes are due and your Bank of America account is showing a zero balance. Now, will they sort it out? Sure. But what if it takes them a few days? What if it takes them a week? All of a sudden you have no cash,
Hmm.
right? So these things can cause problems. The other thing is when systems have failed, countries will typically force people to bail in to the banks. So what they'll do, and we've seen this like in Greece, we've seen it in a whole bunch of places. What they'll do is they'll say, "Hey, guess what? We're devaluing our fiat currency, and your money in the bank, it instead of being worth X, it's worth Y." Where Y is a lower number, and we'll give you access to some of it. We'll give you enough to buy groceries, but it's staying in the bank. Technically, you own it, but it's worth less and you can't get access to it. In a situation like that, and people love to say, "Oh, well, that can't happen here." Well,
Yeah.
everybody who's had money in a bank that was nationalized or where there was a bail-in or have been in a country where they instituted currency controls, they all thought it wouldn't happen to them. Um, just don't have all of your assets in one place. Your last question is, do I use those assets to trade? No, I don't. Like my Bitcoin holdings, I just hold and I don't sell it and I don't trade it. And I just want to own some of these things long term. And what I'm doing is I'm saying that one, I want the returns from that Bitcoin, which will rival, the returns from my stock picks. Okay, great. But two, I want to have the security of having some assets outside the system. And that's why I do things the way I do. And does that mean that, my brokerage account has a smaller amount of assets in it? Yeah, of course it does. It does mean that I don't have all of my assets available to trade, to trade on my stock picks. But, I'd rather have something outside the system and trade with a smaller amount of money.
Great stuff there, Gary. And yeah, quite the irony coming from Moynihan. Great timing on all of that. That was awesome. Thing number two, moving to Bank of Japan. Like we said, it's been a while since we've chatted BOJ. You're saying they're trapped. And of course, they make the worst of two bad choices. Again, Gary, is what you're saying. Thing number two, Japan's BOJ in a rate hike trap as the yen slides again.
Yeah, this is a bad situation, and it's too bad. And I never mean to be, pounding on Japan. I like Japan. The Japanese people I've met when I've been there have been nothing but nice and polite and kind. I want nothing but the best for them. Unfortunately, we've talked about this at length before, Rob. Unfortunately, what Japan did in order to deal with issues with their economy is they tried an enormous amount of stimulus over a really long period of time. So they kept their interest rates, their version of the Fed funds rate, negative for something like 9 years. And they spent so much money on stimulus that their debt to GDP is over 260%. That's an enormous number, about double what we have here, about double the amount of debt to GDP we have here in the US. And so, basically what's happened is once central banks all over the world, banks like, the European Central Bank, the Bank of England, the United States Federal Reserve, once they started raising rates in 2022, that made the Japanese yen less attractive in comparison. When you could get, 3, 4, 5% in US Treasury bills or Treasury bonds, depending on the duration you were looking at. And, Japanese government bonds were trading somewhere between 0 and 1%. That made the yen less attractive. And so, people were selling the yen and buying the dollar, and, they were shorting Japanese government bonds and buying US government bonds or US securities. And that was called the carry trade. And they made money from that. Well, the problem for Japan is with the yen sliding, and at one point it had gone in about 2.5 years from 102 to the dollar to 162 to the dollar, something like that, which is massive devaluation. The problem with that is, talk about inflation. When your currency is sliding that much, it creates an inflation problem for your citizens. Well, the thing the Bank of Japan needed to do was raise rates. The issue is when you have your debt to GDP at 260% and you raise your interest rates, what you end up with is an enormous amount of interest expense, and that blows out the budget. The only way they can pay for it is to print more yen, creating more inflation. Whatever they do, they're trapped. Now, if anybody thinks I'm picking on Japan, I'm not. We have the same problem here. Great Britain has the same problem. The European Union has the same problem. These are issues all over the place. We're just seeing the evidence of it in Japan first. And then, in my opinion, last week, Japan's prime minister made a huge error. He publicly ruled out further interest rate hikes for now. The yen promptly fell from 142 to the dollar to 148 to the dollar. That may not sound like much, but in the foreign currency markets, that is a huge move. And the key thing is, what he just did was gave the green light to traders to pile back into the carry trade, because the risk of being in the carry trade was always that the Bank of Japan would raise rates and strengthen the yen. And if you're short the yen, that's the last thing you'd want to see. When people had the carry trade on and the Bank of Japan raised rates and the yen went from 162 to the dollar to 142 to the dollar, the traders who were short the yen got crushed. Well, Japan's prime minister just came out and told the market, don't worry, you can short the yen. We're not going to raise rates. You're safe shorting our currency. Listen, if Japan doesn't want to raise rates, that is their business. I think it's a mistake, but I understand the decision, and that's their choice. But you don't need to say it publicly. You don't need to tell the public, don't worry. What I would have done if I would have been them is call the Bank of Japan and say, hey, just so you know, we don't want you raising rates. Do you concur? The Bank of Japan says, okay, we understand. We're not going to raise rates. And then everybody says, this is a private conversation. You go out in public and you say, hey, everyone, we just want to let you know that, we've spoken with the Bank of Japan. We're not sure what we're going to do with interest rates. And maybe we'll raise them. Maybe we'll keep them the same. And, you want to short the yen, you're going to be taking risk. And that would have bought Japan a little more flexibility, a little more rope by giving the trading world certainty. By communicating those plans in advance, they just made it easier to short their own currency. I think both decisions were wrong, but if they're going to make the decision to not raise rates, then just keep it to yourself. I don't know why they felt the need to communicate that in public.
Gary, with the huge amount of debts and then reducing the value of their currency, is that malpractice or is that debasement of the dollar by design? And then my question would be too, is like you mentioned it, we're seeing very eerily similar things happening here in the United States as well.
Well, so for clarity, Rob, I all fiat currencies end up getting debased. They all go to zero. One of the things we've talked about at length is, in history, there have been 775 fiat currencies. Again, for people who don't do this for a living, a fiat currency is simply a government-sponsored currency. The dollar is a fiat currency. The British pound, the euro, the yen, the Mexican peso, the Peruvian sol. These are all fiat currencies. So they're all being debased. They all go to zero. This is just the way these things work. I do not think for a minute that this was intentional malpractice by Japan. I don't think they had bad intentions. I think they had a stagnant economy. They have a a population and demographic problem, and they were trying to stimulate their economy. I think what they did was a mistake, but I don't think malpractice sort of implies bad intentions, right? Or just, gross negligence. I think they looked at it and they made a decision, and this is a problem. And you're right, everybody's making that same wrong decision, and it's a problem. And this again is why we're seeing gold at all-time highs, why we're seeing silver, huge rebound off the bottom, why Bitcoin in the last year has gone from, 15,000 to above 60,000. The world is moving toward, this is why we're calling this episode, right? The higher commodity price issue. People are starting to get really worried about fiat currencies and moving to harder assets.
Thing number three, Gary, we're going to Costco, ticker COST. They're selling platinum bars now in addition to gold. Is the dollar in great shape? Gary, you're saying you're skeptical. I think we all know that. Thing number three, Gary, Costco adds platinum to its precious metals lineup, along the same vein of what you were just describing.
All right, Rob, a little economic history here. Um, when the United States established the Federal Reserve Bank, um, a little over 100 years ago in the early 1900s, it actually was effectively the third national bank of the United States. The first two failed horribly and, should have never been tried. And so, somebody figured out, well, if we call it the third national bank, everybody's going to figure out. They called it the Federal Reserve. That sounded a lot more secure. And what that did was they made it possible for the government to have more control over the currency and for us to run the massive debts and deficits that we do now. Then a couple of decades later, then President Franklin Roosevelt took us off well, he didn't take us off the gold standard, but what he did was he confiscated everybody's gold and then revalued the dollar, right? So he said, give me your gold. I'm going to give you dollars. And then the minute it was done, he said, by the way, your dollars are worth less. And then in 1971, President Nixon took us off the gold standard. The reason he did was because the United States didn't have enough gold to cover our debts. We had printed and sent out to the world more currency than we had gold to back it. So now the dollar is backed by faith and credit. And, we talked about this last week. That's the credit of an institution that has $36 trillion of on-balance sheet debt, another $200 trillion of off-balance sheet. So almost a quarter of a quadrillion dollars of debt. That credit could not be rated any worse. I don't understand why anybody would extend the US government any credit except for the fact that it can print dollars, so technically can't default. As for faith, I would suggest that your faith be placed in other places. And, the truth is, if you had faith in the government, you probably wouldn't be watching Deep Knowledge Investing's 5 Things. So the result of all of this is more and more people are getting interested in owning physical gold. And the reason for that is because we're all seeing inflation. Now, inflation used to be defined as an expansion of the money supply. And then they got redefined to mean an increase in prices. And the way I like to reframe it for people is to point out that what it really means is a loss of purchasing power of your dollars, where gold is holding its purchasing power. And that's why gold is now at all-time highs. Costco, realizing this, a little over a year ago, started selling gold bars to their customers and couldn't keep them in stock. I mean, they sold $200 million, 1/5 of $1 billion worth of gold bars per month. At this point, they've sold a couple of $1 billion worth of gold bars. And, just, I think it was last week, it might've been 2 weeks ago. But Costco has started to say, you know what? We're not only going to sell gold bars, now they're selling platinum as well. And, as of last week, I think it was Alex who looked this up. Great job by the DKI interns. Costco was selling 1 ounce platinum bars for $1,089.99. So $1,090, which was a small markup from the then current platinum spot price of $1,025. So Costco is now selling gold. They're selling platinum bars. They're also selling diamonds, but given the actual supply and demand of that, I wouldn't own diamonds as an investment. If you want to buy one as a present, that's something different. But um, basically, Costco is selling billions of dollars of precious metals.
Anything more to add to that, Gary, other than, hey, safeguarding against obviously what we've talked about over and over again, the eroding value of paper currency?
You know what, Rob? I think the two key points that we've already hit in this episode and we talk about on a monthly basis are one, the dollar is losing purchasing power and will continue to lose purchasing power. You cannot save in dollars. And so if you have the resources to diversify a little bit, for me, I keep enough dollars just to pay my mortgage and pay my bills. Everything else I have invested in other things because I don't like losing purchasing power. And then the other thing is, this is just, it's another reminder, have some assets outside the system, right? You don't have $2,700 to buy gold. Okay. You can buy, for just over $1,000, you could buy platinum.
Right.
For a fraction of that, you could buy silver. And Bitcoin, as a reminder, can be bought in tiny, tiny fractions. You can buy Satoshis. Buy it, stack it, hold it, and just have and I'm not saying do this with all your money. I'm not a Bitcoin maxi, but have some assets outside the system. Start if you can. Start to save in something other than dollars. Now, for people, and I know I've talked a lot about having money outside the system, and I've talked a lot about self custody. For people who say, hey, listen, I don't care. There is no way in the world I pull together $2,700 to have an ounce of gold, then that's fine. Another option are ETFs, right? One of them is GLD. There are several of them. And if someone wants to say, hey, but then your money's in a brokerage account, it's still inside the system. Yeah, I get that. But not everybody has the means to own enough gold, for themselves or to protect it or store it securely. People have different needs. And if what you can do, listen, set aside $10 a week or $50 a week or $100 a month or whatever you can do and buy a little bit of gold, buy a little bit of Bitcoin, self custody if you can, right? But have some assets outside the system. Do something to protect yourself.
Thing number four, Gary, global conflict. Obviously, you've got all sorts of wars that it seems like starting to prop up. We're seeing higher oil prices. You're saying that could be a problem for a Federal Reserve that just cut rates. Thing number four, Gary, global tensions each equal rising inflation.
All right. So it's been over 2.5 years since Russia invaded Ukraine. And, Russia is a gigantic energy producer. And now, as everybody knows, for the last year, we've had a war in the Middle East or several of them. That is now starting to spread. Lebanon has fired missiles into Israel. Israel has responded with by dropping bombs on the heads of Hezbollah and also a ground invasion. Um, we understand there are human lives involved. It is not the purview of Deep Knowledge Investing or the show to talk about politics or wars. Um, we focus on finance. And so, with respect to the people whose lives are affected by this, we're going to talk about finance. And, there are other places to go to argue about these things. Um, Obviously, the Middle East is a huge region of the world for energy production, oil in particular. And what we've seen in just the last 2 weeks with the escalating conflict between Israel and Lebanon is the price of oil has gone from $72 a barrel to 81 a barrel. That's a pretty big move in a couple of weeks. And Rob, you made the key point, which is when that happens, what do you think happens to the CPI? Right? Energy is a huge part of the consumer price index. That is the index that people use to calculate inflation. Now, astute viewers will point out, wait, that won't affect the core CPI. And that's true. Core excludes food and energy, which are volatile. And people, in the last couple of years started talking about super core, which excludes food, oil, and shelter, which at this point, we're now talking about something like 60 or 70% of the CPI being excluded, or maybe a little less than that, a little between 50 and 60%. There's an old joke by somebody I like on Twitter or X, Caleb Franzen, who said if you exclude everything, the CPI is zero. It's the Franzen index, it's always zero. But the key point of all of this is last month, the Federal Reserve cut interest rates. And at the time, we warned they're cutting prematurely. And the thing, we think the Fed is making the Arthur Burns mistake and they're cutting too soon and we're going to get a resurgence of inflation. And, if energy prices start to skyrocket, that's what we're going to see, a higher CPI. And the Federal Reserve is not going to look great, looking at an inflationary spike right after they cut rates. Now, is that the Fed's fault? No, but it also was foreseeable. It's not like conflict in the Middle East just happened in the last 2 weeks and everyone said, oh my God, how did this happen? We've never seen this before. This has been going on for decades. And this particular round has been going on for, well, I'm sad to say this is October 7th, 2024. This particular round has been going on for exactly 1 year, which itself is incredibly disturbing to say, but that's where we are at the moment.
Gary, I know DKI has a large oil position within the portfolio. How closely aligned is DKI's portfolio with the rising or falling price of just a barrel of oil?
So our portfolio is long a huge amount of energy, and that is for two reasons. One reason is because um, owning oil or oil related assets is a great way to insure against the loss of purchasing power of the dollar. And, I remember a couple of years ago having a really interesting conversation with somebody, a hedge fund manager who's very systematic and smart in his thinking. And, he said to me, I think all the time about what would I want my net worth to be denominated in? Would I want my net worth to be denominated in dollars, barrels of oil, Bitcoin, bars of gold, and whatever it is? And his answer was barrels of oil because oil is incredibly useful and demand for that has not gone down. So, for that, I think that makes a lot of sense. And, with the declining purchasing power of the dollar and increasing energy demands for the whole world, I like owning a lot of oil for that. The other reason we are long so much energy is because we own huge amounts of uranium. If you want electric cars, if you want AI, data centers, if you want to have data centers powered by tens of thousands or hundreds of thousands of, NVIDIA's best chips, those each data center uses enough energy to power multiple cities. And the only way you're going to be able to do that without a higher carbon footprint is nuclear. And people are starting to realize that. And as that's happening, the demand for uranium is skyrocketing and supply isn't going up fast enough. So for all those reasons, we own huge amounts of energy. You know, again, the recent move is related to war. I wish that weren't the reason we were making money in these names. But, again, one of the weird things about this business is, you look at things and frequently see things that are wrong or terrible or inadvisable or horrible. And, you can recognize them as wrong or bad, but it's still our responsibility to find a way to help our partners, our subscribers, our clients make money in any environment and for any reason. And so, you just sort of leave that at the door when you're sitting at your desk.
Gary, moving on to thing number 5. Again, we're calling this kind of our investor education thing that we've been at and working really closely with partners over at Learn Wall Street. Today, Gary, we're going to talk about if you're down in a stock that you like, when should you sell is the question that we're asking here today. Brings us to thing number 5, Gary. Losses are sometimes okay.
Yeah, and figuring out how to limit losses and what your plan is really important. And here's why it's important. Raji Kabaz of Learn Wall Street points out some really basic math, but it's important math. let's imagine for a minute you own a stock, the stock's trading at 100, and say it goes down by 50%. So now it's trading at 50. You've lost 50% of your money in that stock. For that stock to go back to what would be break even for you, back to where it was before, it has to rise not 50%. It has to rise 100%. To go from 100 to 50 is a 50% loss. To go from 50 to 100 is a 100% gain. Once you've lost capital, it is increasingly more difficult to make that capital back up. Now, can it be done? Of course. You know, I've been in the money management business for more than 3 decades, and believe me, we've all had bad stock picks, we've all had bad years, we've all had losses, and you know, you work at it, you can make it up. But it's very important to plan ahead and figure out how you will handle losses, how you'll handle adversity. Now, there are a couple of ways that people do it. What some people do, and I don't do this, but what some people do is they use stop losses. And they say, okay, if the stock goes down 5%, I'm just going to sell it. If it goes down 10%, I'm going to sell it. Whatever that number is, they set that. And if they have a loss of that amount, they just sell the position and they say, look, you know, I'm not prepared to lose more than 5% or 10% or whatever that number is for them in a name. And the good thing about that particular strategy is it means you're not going to get your head handed to you in one stock, in one name. And it's a way to ensure you don't take huge losses. And that can be a good thing. Here's the downside of that strategy. The downside of that strategy is there's a lot of volatility in the market, and stocks frequently move 5 or 10% for no reason at all. You wake up one morning and things are down, you wake up another morning, things are up, and sometimes there's just no reason. And so poor use of stop losses can just lead to lots and lots of 5 or 10% losses. And, you know, this is why you need to consider your strategy. Now, what we do at Deep Knowledge Investing is we focus on potentially very high return stocks where there's some sort of misunderstanding of the investment opportunity, where, you know, the dominant narrative about a particular stock, a particular company is, in our opinion, incorrect. And the thing about that, those situations, is the market can be incorrect for a long time. And so if we understand the reason a stock is down and we disagree with it and our investment thesis is still intact, I frequently will buy more of a stock when it's down. And when that's happened and we've been right in it, we end up making more money in this. And, you know, one of the great examples we had in this with actually when Raji Kabaz and I were running Silver Arrow was a company called Digital Realty. There was a short story out on the company that was incorrect. The people who were advocating the short story didn't understand REIT accounting. REIT stands for Real Estate Investment Trust. Digital Realty was one of them. And the short sellers didn't understand REIT accounting, and they didn't understand the assets that the company owned. They thought they owned computer servers, which should be depreciated on a 3 to 5 year life. They really owned steel shelving that the servers were on, which to have a useful life of hundreds of years. So we knew the short case was wrong, and we bought the stock and it went down. And everybody said the short seller's right. We knew we were right. We bought more of it. It went down more. People were celebrating the short seller and saying he was right. He wasn't right. We bought more. Guess what? That stock more than doubled off the low because it wasn't a fraud, because we did understand it. And so because we were willing to buy it down, because we were certain that we were right, and we were willing to take a long-term view, we ended up making more money in the name than had we just bought and hold. And had we just put stop losses in place, we would have lost more. Now, am I criticizing the stop loss people? No, not at all. If you're listening to this and you use stop losses and you use them successfully, and it fits your investment strategy and it fits your investment timing and your thesis, great. Good for you. We're not against you. We're not criticizing you. My point in all this is you need to know why you're invested in something, where you think you're right, where you think other people are wrong, what's making that stock move, and what your expected time frame is. And so because we understand all of this, we do the opposite of what the stop loss people do, and we've made more money because of it. Now, you know, is that more dangerous? Yeah, and that's why we don't use leverage. Frequently, the people who are using stop losses, they're using leverage to get better returns. Now, am I being critical of that? No, it's not the strategy I prefer. But, places like Millennium and Citadel have very successfully used that strategy with tens of billions of dollars. I'm not saying we're right and they're wrong. I'm saying to use these techniques successfully, you need to have a very clear understanding of what your investment thesis is, what your time frame is, and what your risk is. And if you understand all of that, you can put together a plan that will help you limit risk. And this is why it's so important. And so know your assets, know the stocks you're in. If you need help, reach out. This is what we do all day, every day.
Would you say, Gary, that on a general basis, when DKI might be selling a position at a loss, it is because that investment thesis has changed?
Yeah, that is exactly what happens. And you know what? I'll give you a great example, Rob. Um, we haven't had many losers at Deep Knowledge Investing. One was in a name where we made more than a double. In 2020 and 2021, we made more than double our money in HCA. I went back to it about a year ago and had the thesis that, their margins would continue to improve. And we hit a quarter where the margins got a lot worse and the company missed. And I still think HCA is a great company, but I had a thesis. We got results that proved the thesis to be wrong. I sold the stock that day. I sold it instantly because the strategy that we use of buying more when you're down is when we know that we're right. Or no is a dangerous word. Let me rephrase that. When we have really good reason to believe that we're right, when we have a great deal of confidence that we're right and we understand what the market is missing. If my thesis in this situation was HCA margins will continue to improve, they've got pricing power, they're getting their expenses under control, and then we see a quarter where the opposite happens and the stock is down, I sold that same day and took the loss. And is it painful to take that loss? Yeah, of course it is. But if you're wrong, you're wrong. And it doesn't happen a lot around here, but you know, nobody gets it right all the time. I certainly don't. And, we just realized the loss immediately. And that's the right way to think about it. Again, you need to know what results would make you right, what results would make you wrong. And in the situations where results show that I'm wrong and my thesis is incorrect, we sell right away, regardless of what the stock has done.
Gary, thanks so much for your insights. As always, I know just personally, I gained so much out of these conversations. Hope all of you listening do as well. This was the Rising Price of Commodities edition of the 5 Things. Just want to say, I know, Gary, you're very thankful a lot of times communicating with our listeners. I'd like to say the same as well. Thank you so much for listening to our show, subscribing to our content and information, and just supporting Deep Knowledge investing in general. We're really looking forward to continuous expansion of content, better content. We just recently put out a survey. If you haven't already seen that in our newsletter that we send out via email, let us know. We can get that out to you. We'd love to hear from you. Tell us what you like, what you dislike, so we can continue to improve the product and the service. But yeah, more than anything, coming from me as co-host of this show, thank you for being such a supportive group. And it's been so fun to watch this grow over the years. And we're really looking forward to more and more growth. Gary, any closing thoughts from you?
Rob, nothing more than what you just mentioned. For people who do want to check that out, either go to, deepknowledgeinvesting.com, click subscribe. We do have a free option, put a note in there, say, hey, send me the survey. I just
Yeah.
want you to know that both Rob and I have read and are reading and will read every single line on every single one of these surveys. We read everybody's comments, and we really do use that information to make sure that our programming is directed at what our viewers and readers and listeners and subscribers want and need. The one thing that doesn't change is the investment strategy, because that's how we make money. And if that's interesting to you, feel free to click the paid subscription option, and we'll do all we can to help you. But for those of you who are just watching and listening, thanks for spending your time with us. Thanks for liking and subscribing. We really appreciate it. And Rob, great to see you again. Glad to have you back in the host chair.
It's great. Thanks so much, Gary.
All right. See everyone next week.